Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify, Apple, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which makes crypto investing easy. I've been using Uphold since 2017. One of my go-to exchanges. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. Right now, they're running a great promo that if you spend $600, you can get $50 in Bitcoin for free. So if you'd like to learn more, please visit the link in the description. All right, my friends, let's start off with the price of Bitcoin, because right now Bitcoin has been consolidating. It's a bit boring. It's chopping between 27 and 28,000, but we know we are on that path to Bitcoin's retracement to 40 to 50,000. One analyst is saying here, this is your daily reminder, 40K is still a magnet. So it's definitely looking bullish on the charts. Yes, the bulls and the bears are battling, but as far as the higher probability of what's going to play out, I think it has to be Bitcoin's retracement like we've seen historically. Now, that's not guaranteed. We'll have to wait and see how things play out, but it's certainly looking like it's like how it did in 2019. And you can see here from the lines I've drawn on my amateur trading view chart here, the market cycles are playing out, and this is not a move to new all-time highs. It's just a retracement move, and then Bitcoin will pull back, and then I think the real bull market starts next year after the Bitcoin halving. And another metric that confirms that it's bullish for assets right now is the dollar currency index. The DXY is breakdown here. If you look at the charts, it's just been crashing. And if it breaks down below, this support level here on the chart, which is about the 101 level, that's going to be extremely bullish for, crypto and equities. But once again, not guaranteed. But, we look at the probabilities, and I think this has the higher probability of playing out. Now, we actually had some interesting news around Bitcoin today. One, fashion giant Ralph Lauren to accept Bitcoin payments in their Miami store. So it's good to see, adoption of crypto, whether even it just be, one store in Miami. It's still a move in the direction of adoption and more acceptance of crypto, and that is key. It's critical for the further growth and building out of the infrastructure, guys, because the more people are familiar with it, the more it appears in the different parts of our lives and in society, the more people will learn about it and become more accepting of it, right? It's kind of like the marketing term or principle that people need to see things at least 3 times before they commit to buying or engaging with it. So it's these subtle little things are super important. And when you have big brands that people are familiar with and trust and have or they resonate with, and they're accepting crypto, that's definitely positive, guys. Now, there was some not so good news in Texas about Bitcoin mining. So there's a Texas bill limiting benefits of crypto miners, which unanimously passed the committee vote. So we know there's a ton of Bitcoin mining happening in Texas. And here, Dennis Porter highlighted parts of it. He said Senate Bill 1751 caps how much miners can participate in grid balancing programs, said Satoshi Action Fund co-founder and CEO Dennis Porter, who added that there were no committee votes in opposition. So not so good news here for miners in Texas. And, the United States right now is leading in Bitcoin mining as far as the hash rate. So that's a really good sign. And we're hoping that the U.S., they can be more accepting of Bitcoin and other cryptocurrencies. Right now, we're facing a lot of headwinds, right, guys? Tons of enforcement actions, tons of government agencies going after crypto. Here, Pierre Ricard, who is a VP of research at Riot Blockchain, they actually have a very large mining facility down in Texas. He said, sadly, the anti-Bitcoin bill in Texas, SB 1751, has passed committee. Lots of education work ahead. This bill is bad for rural jobs and economic growth. So let's see what they can do here. They can still fight this. It hasn't, become fully law or whatever it is, but no one opposed it in the committee. So they got some work to do here, guys. Now, here's the big news of the day, in my opinion. S&P Global plans decentralized finance push as it looks for DeFi director. Many times we've seen some of these big institutions and the job listings they put out there kind of gives us insight into their strategy around crypto, right? They want to get the talent. They need to build their teams and build out their divisions. Well, you need the right people and the qualified people to do that. And you get a really great insight into what they're looking to do. And we've seen this from many, many big banks and institutions and so forth. So I don't know if I need to explain what S&P Global is, my friends. The stock market, they do a lot of indices. They work with a lot of big firms, data analytics, research, insights, ratings and benchmarks, technology solutions. And if you guys recall, they created crypto indices. I think it was last year or the year before. So this is not their first go around with crypto. And, they powered S&P Dow Jones indices and many more data and analytics and funds and so on and so forth. So let me give the details here, guys. S&P Global is on the hunt for a director of DeFi as the business and analytics firms looks to firm up its strategy around decentralized markets. The successful candidate will work with Chuck Mounts, S&P's chief DeFi officer, and help build and implement the firm's strategies in the space. According to the job posting, here's a quote: "A crypto market participant with a deep understanding of the disruption it represents both for our company and our customers is how the firm describes what it is looking for." Very insightful, right? They recognize the disruption. What have we been talking about here, guys? The headwinds, the fight, we're in the then they fight you phase is because these folks are getting disrupted. Now, the smart ones will adopt technology. We'll start building. We'll start integrating into it. And S&P Global here, it looks like they're looking to do that. They're hiring. They're growing. And according to some people, crypto is a scam, a fad, a danger to the financial system, right? Elizabeth Warren is running an anti-crypto campaign, but yet the biggest firms are hiring, building, expanding. NASDAQ will be launching, they confirmed just a couple of weeks ago, their crypto custody service by the end of Q2. Fidelity rolled out in Q1 their full crypto trading service, right? What's happening? BNY Mellon last year launched crypto custody. BlackRock, we know they're involved with Coinbase. They launch a Bitcoin spot trust. They're involved with Circle and many other firms, right? MasterCard, Visa, and so forth. So why that dichotomy? Why on one side you have all this attack and FUD, and yet the biggest institutions don't seem to be scared. They don't seem to be bothered. They're hiring, right? It's because the coordinated attack, as we've been talking about, is to slow down the startups, to slow down the disruptors. So the big incumbents like your S&P Global, which has been around a very long time, like your NASDAQ, which has been around a very long time, to come in and set up shop. So S&P Global's hiring for the space signals how mainstream interest continues to grow despite cryptocurrencies that have tumbled from their 2021 highs and the myriad of bankruptcies that have shattered the sector. It says here, as well as understanding S&P Global's business and product lines, potential candidates should have a solid foundation in crypto finance and DeFi. The salary range for the role is between $107,100 to $212,975, depending on location, experience, and qualifications. The DeFi team covers at S&P Global it covers blockchain, Web3, and the metaverse, as well as decentralized finance. It plays a critical role in identifying and navigating future disruption risks. It also identifies and facilitates new investments and partnership opportunities, according to the listing. Very insightful, right? Of what they're looking to do. It's clearly stating what we've been talking about, guys. Disruption is at the door of the incumbents. And of course, they're using these government agencies, they're buying up politicians like Elizabeth Warren and regulators like Gary Gensler to slow this market down. So if there was ever a doubt of what's happening here, here's confirmation, right? This clearly kind of lays it out, gives you the lay of the land of what's happening. Now, Despite, once again, all the headwinds we're facing, crypto projects and companies continue to raise money and expand and build, which is a great sign. So crypto protocol LayerZero raises $120 million at a $3 billion valuation. The valuation is triple the level of the firm's previous funding round in March 2022. So blockchain infrastructure provider LayerZero Labs has raised $120 million. Investors in the latest round included the crypto arm of noted investment firm Andreessen Horowitz. Anything Andreessen Horowitz is behind, I'm going to have to jump behind, guys. I've talked about it many times. Andreessen, Mark Andreessen, Ben Horowitz. Those guys go back to the days of Netscape. They've been in Web 1, they've been in Web 2, now they're here in Web 3, building, investing, and so forth. It says here, Andreessen Horowitz, Auction House, Christie's, Sequoia Capital, and Samsung Next. The round had 33 total backers, including Bond, Circle Ventures, and OpenSea Ventures. The capital will grow or go towards growth initiatives, including hiring and expanding the company's presence in the Asia-Pacific region. Friendly reminder, crypto is a global asset class. So despite what the hell the United States is doing right now, it ain't stopping crypto globally, right? This thing is moving ahead. The funding round is a rare 9-figure deal during a crypto bear market that has seen investments in industry slow to a glacial pace, though infrastructure-based focus projects have proven the most resilient. Vancouver, British Columbia-based LayerZero offers interoperability and cross-chain messaging infrastructure that allow decentralized application developers to reach multiple blockchains without the need for a middleman to facilitate the cross-chain interactions. That is key, and I can see why they're getting so much money, because as we just saw, what S&P is trying to do with DeFi, the future is DeFi, my friends, and interoperability. There's going to be multiple blockchains, different companies and governments and so forth. They're going to use different blockchains. Well, they all have to speak with each other. They all have to connect and be able to work together, right? There's going to be different apps. So interoperability is so critical for the future adoption, because you can't have one part of the world using this blockchain A, and another part using blockchain B, and another part using blockchain C, and they can't communicate. The data can't be shared instantaneously. Then what's the point? You have more walled gardens, right? You need to be able to have the interoperability, the communication, the movement of data. And of course, you have rules and all these things, right? Programmed into the blockchains, but you're going to need to be able to communicate. Here's a quote: LayerZero is to blockchains what the internet was to computing clusters. LayerZero also, allows chains not only to build bridges to transfer assets/value between them, but send and execute arbitrary data just like a packet on the internet. Brian Pellegrino, co-founder and CEO of LayerZero Labs, said, he said in an email to CoinDesk, what this means is that you can now build applications that are orders of magnitude more complex than existing applications, and do so with a completely seamless experience between chains. Smart move on their part, building this type of solution. This is so critical for the growth and adoption of crypto, guys, and different blockchains being able to communicate with each other. Here's another example of funding. Delphi Labs raises $13.5 million for Web3 accelerator. P2P led and Jump Crypto joined the incubator's first external funding round. So once again, guys, the capital's still coming in. People are still bullish. They're still looking to the future. I'm sure many are looking past all this nonsense with the SEC and crypto and the governments and so forth. So the funds will go toward building out an accelerator that aims to foster the growth of teams working to launch Web3 projects. The raise was Delphi's first time courting outside investments. Here's a quote: over our approximate 6 years in crypto, we've consulted for, invested in, and helped build several multi-billion-dollar protocols across every vertical in crypto. We know firsthand how hard it is to build a crypto startup, and we've experienced all the common pitfalls, wrote the Delphi team in a draft announcement post shared with CoinDesk. It says here, each team in the accelerator will receive $200,000 in funding. The main part of the program will last for 4 to 6 months, and project teams will be introduced to Delphi's network of potential investors at the end of the program. Participants will receive hands-on advice from a core team of engineers, economists, designers, lawyers, and entrepreneurs on everything from product development, legal advice, and go-to-market strategies. Now let's move ahead. Here's an example of building and partnerships. Coinbase to offer faster transactions on derivatives exchange through partnership with infrastructure provider TNS. The new infrastructure will enable institutional traders to increase storage capacity and process large data sets with minimal delay. So building out the infrastructure here for a better experience for retail. No, institutional, right? The folks who have the big money. Don't get me wrong, the Coinbase has been working on improving retail stuff, but when I see institutional, that means big money, and that makes me very bullish. So Coinbase unveiled the Derivatives Exchange, CDE, which is regulated by the CFTC in June 2022 to attract more retail traders. Futures contracts require less upfront investment than traditional Bitcoin futures. The cloud-based financial trading infrastructure deployed by TNS for the exchange will enable institutional investors to increase storage capabilities and process large data sets with minimal delay. Here's a quote: "Crypto has witnessed both volatile and liquid markets, and with institutional adoption remaining strong, we believe the time is right for the offering that TNS brings to the table," CDE CEO Boris Yelevsky said. "Dedicated cloud infrastructure connectivity coupled with our derivatives exchange represents a mission-critical step towards supporting and maintaining a vibrant and reliable crypto derivatives market." So guys, the investing, the building continues. That's a great sign. Here, Chainalysis and Halborn joined forces to tackle crypto fraud. So this is from Blockworks. It says, exclusive, Halborn's 100 white hackers are getting a crypto fraud detection system. Chainalysis, an executive told Blockworks. This is great news because, I've been on record. The SEC and these folks need to do their job and weed out the scammers, because scammers exist in every market. And with every new technology, they try to exploit it to take advantage of people. That is just human civilization and life, right? You have people who are going to do bad activities. So we want these government agencies like the SEC and so forth to do their jobs. But what we don't want is them to go after the good actors who are just entrepreneurs and innovators, right? And this is the problem we have today. But there are problems in the crypto market where we need these guardrails in place to stop bad actors. And great to see Chainalysis. They do great work, and they're partnering here to just expand and do some things here to protect the industry. So the 7-phase planned partnership is designed to help equip Web3 companies at any stage to present and respond to security threats that have plagued the industry. Both companies first told Blockworks in a statement on Tuesday. Awareness of scams, frauds, and purported or documented crimes have kept crypto industry participants on edge in 2023. Industry participants say that that has been especially true in recent weeks as the SEC and CFTC have continued their offenses against a number of crypto or major crypto players in U.S. ties. So this is great, guys. This is stuff you want to see. It's super important for adoption, because if you have scammers and fraud happening, it's going to roadblock a lot of people from adopting crypto, right? So you got to weed these things out. And this is, not new. It happens with every disruptive tech. In the early days of the internet, there were scammers and people doing all kinds of stuff, bad websites and eventually bad apps and so forth. Well, now we're with crypto, the next layer, and you're going to have bad actors as well. It's just a natural part of life and what happens. So great to see these folks are working on solutions to help protect the industry. Now, we got some Aave news. I personally don't hold the Aave token. I'm sure some of you do, but Aave governance gives okay to BNB chain Polygon's ZK EVM. Aave token holders have had a full plate of late as the DAO works on the protocol's expansion plans. So that's good. It says here, community governance has given a tentative thumbs up to the deployment of Aave's borrowing and lending protocol on 2 additional chains, with a third potentially on the way. Recent temperature check votes provided overwhelming support for adding Aave's latest version 3 to the newly launched Ethereum Layer 2 rollup Polygon ZK EVM, as well as Binance's BNB chain, an alternative Layer 1. Both chains employ dApps using the Ethereum virtual machine. It says here, governance token Aave holders signaled nearly unanimous support for the expansion plans put forth by Mark Zeller, an independent Aave DAO delegate with the Aave Chan initiative. Zeller's own vote in favor represents over 40% of the vote total in each case. Of his stake, around 95% of the delegated Aave comes from 190 individual holders, Zeller told Blockworks. So this is great, guys. Aave expanding to other chains. As always, they need to make sure the security is good, right? No exploits and in folks trying to do DeFi activities. Finally, Casper. Some of you may hold the Casper tokens. I personally don't. I'm going to look into it, but here they tweeted out, Casper Labs joins World Economic Forum Global Innovators Community as blockchain and digital assets partner. Very interesting. When I'm investing in a project, I want to see, who are they partnering with? Are they getting validation from real organizations, governments, big companies, right? You look at, for example, Hedera. Hedera is partnered with Google and Boeing and so forth. Ripple is partnering with American Express and many other banks. So you want to make sure that you're seeing adoption, partnerships, these projects, people are looking into them, investing in them, partnering with them, building on them. That's a big item on the checklist, right? Because you just don't want to say, oh, here, I have this new token in blockchain. Okay, well, what does it do? Does it solve a real world problem? Do you have actual companies using your blockchain, right? These are things you want to use to validate projects before you put your money anywhere near them. So interesting move here. I know some folks that have the Casper token in their portfolio, and I'll look into it. If you guys hold Casper, leave your thoughts and comments below, and let me know what you think about the news, guys. That's it, and I'll talk to you all later.